Palisade Radio is brought to you by First Majestic Silver Corp, one of the world's purest and fastest growing silver mining companies.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, and on the line with us today is a new guest from Switzerland. His name's Florian Siegfried. He's the Senior Portfolio Manager at Aganola, which can be found at aganola.com. Florian, welcome on the show.
Thanks for having me, Colin. It's a pleasure.
Yeah, there's a lot of excitement. We were just talking about this is Thursday, February 11th, we're recording. And for the gold bugs out there, you'll remember that as we post this probably on Sunday as a day when gold opened up about $40 an ounce against the global equities, which are pulling back. It's a refreshing thing to see for the gold bugs who have been waiting for years now for things to turn around, and this might finally be it. Florian, what do you think? Is this the bottom, and how do the general equities play out in the coming months as well?
Yeah, I think we are completing a long bear market which started in 2011, around September or August 2011, and there's been probably like a cyclical bear in the gold space, and on the other side we had a cyclical bull market in equities. And I would say, don't watch things isolated. Look at the whole picture. And my feeling is that clearly equity markets are rolling over. The market internals are clearly deteriorating. You have widening credit spreads. So a mixture of news that makes the market very nervous. On the other side, you see the safety bet, which creates a good bid for the gold price. And what makes me more positive now is that you see mining shares clearly outperforming bullion, which is always a classical feature of how the bull market starts. We have seen the opposite on the other side, and in the down cycle where the mining shares have gradually underperformed the price of bullion, and now we've seen since a few weeks the opposite side. Yeah, I think we are completing the bear market here, and I think we are probably heading into an exciting year, yeah.
Florian, in terms of your fund and your investment philosophy, what can you tell our listeners about how you've been investing over the past couple of years, what your focus is, what size company, commodity focus, etc.?
I'm clearly been in gold. I think it's the metal I like most. Because I still think the overriding problem is deflation, right? So you have a deflationary environment with deflating commodities and now deflating asset prices. And gold is basically a monetary metal, so it really is not a commodity which is used by industrial use or sorts of things like that. So it serves as a wealth preservation item, and it replaces probably cash. So given my long-term fundamental view on gold and how it should behave during asset or currency deflation times, I stick with the gold shares, and my positioning has been to buy or to invest the value space in the mid-tier segment. So I would say everything which is probably producing, let's say, 100 to 400 ounces of gold per year, and gets the benefit from weak local currencies, especially in Australia, where we're trading above $1,600, or Canada, where we probably also trade more than 1,600 Canadian dollars per ounce. I think these companies, they get a very good gold price. It's, I think, under-regarded in this market because everybody's so focused on the US dollar price, but they get a good local price. Their costs are coming down. Crude oil has been in very big depressed. Consumables are down. There is an excess pool of labor, probably from base metals, drilling, contractors. So I think you see an ongoing squeeze in costs. And all the companies which are not too big and which have actually the balance sheet which allows them to take those margins which they create from an operating side and reinvest a portion of that cash flow into the business. I think they have been good outperformers over the last 2 years, and I would say they continue to do so. Yeah. My focus is not on the big caps, and I see some fundamental issues, with selling assets, fixing balance sheets. I really want to be in the more junior or mid-tier space where people can actually, or have the balance sheet to buy and make acquisitions at these low prices. I think that makes perfect sense. It's like buying low and selling high, right?
Yeah, and I think investors are noticing quite a stark difference from the last time that gold started to move, which was after the financial crisis in 2008. There are some similarities in that the stock market were at lofty levels then and is once again now starting to come down. But of course, the difference being that gold was also in a strong position going into the financial crisis, whereas right now it's been negatively correlated to the stock market for the past few years. And it's very refreshing to see as the stock market is pulling back to have gold and the gold stocks going up. Is that something that you expect to continue, that the negative correlation between gold and gold stocks and the equities will continue as it's been for the past couple years?
Yeah, I would say so. I would subscribe to that argument. I mean, in the end, I think it's really simple. You know, we had really we had the boom, or we had party time in the markets for the last 6-7 years, and of course, it's always the public or the speculators who decide in what to invest in. And usually, what you see into any kind of boom is that financial assets they get the bid, so they're getting a higher price over time, and not necessarily gold. I think in the contraction phase, you see the other side. So gold relative to financial asset is gaining in value, while in the boom time it's the other side. And I think this trade has basically reversed over the last few months. And I think for gold that should play out to be the case, and also for the gold shares, yeah, because they were not part of the equity rally over the last few years, because gold was really flat. No, it was no interest in it. And I think that's the classical feature of a boom. Gold is not part of the boom time. Gold gets the bid when the contraction starts, and I think this is where we are.
So the major movers so far in the beginning of this rally have been the majors: Barrick, Newmont, not quite as much, Gold Corp. And that's quite usual for the beginning of a gold rally. Money seems to go into the big names and then flow down to the mid-tiers and, of course, eventually the juniors and the explorers. Some of the issues that are plaguing these big companies, they, of course, made some overpriced acquisitions in 2010, 2011. Many of the balance sheets are far from ideal, and these are things that you believe are going to hamper the performance of these companies over the next couple years into the start of this bull market. You've touched on this a little bit a couple minutes ago, but what would you say you're looking for in a company, because there are several out there for investors to choose from? What are the different metrics that you're looking for? And after that, we can start talking about a couple examples that interest you at this time.
Yeah, I think it's of course, when you have good action in the market, it's no surprise that the big names like Barrick, Newmont, AngloGold, they get all the attention. And I think the moves in the stock price are also reflecting that indeed these are companies which have quite a high leverage on the gold price, because their balance sheet is somehow leveraged. And they have and with the higher gold price and the fixed cost structure, they get a higher operational leverage. So I think you can explain the move very rationally, from a rational standpoint. My question mark would just be look into let's say the longer term or mid-term growth of the production pipeline. Because there will be a point where these guys have to somehow replace their existing production. They have to add some new mines. And if you're not a super bull on gold, let's assume it stays at a certain level, sooner or later they have to reinvest into their business. That means they have to buy something, or they have to bring something into the production. So I think the market now has clearly a view which is more short-term oriented, but on the longer term, I think those cash flows could be turning into a challenge when they face new investments into their mines. And I think that's a little bit overlooked right now. So what I like here is, as I said before in the introduction, is more the smaller names where you have pretty much a good deal of certainty over their production profile. Let's say the next 7-8 years. Projects which just can't be mined without having massive sustainable capex requirements coming down the road, because then you as a shareholder can basically say, okay, if you are bullish on gold, then these companies should really be able to generate a lot of cash, and that cash is not necessarily used to buy another company or to do a stupid acquisition at much higher prices, and it is also not used to just pay down the debt holders. So I would say look for long-term substantial mines which can create a good deal of cash, and look into the balance sheet, because there are just too many companies which are in terrible financial shape, which loaded up their balance sheet with debt, where all the cash flow they generate will go to the debt holders' pockets in the next few years, leaving nothing for shareholders, and then they probably come to the time where they should reinvest into the business. There is just nothing there. So I think the ingredients would be a clean balance sheet, long life assets, which give you clarity over the next, let's say, 5, 6, 7 years.
Yeah, and Florian, one company that I know is of interest to you, we wrote about it on Palisade Research a couple of months ago, is Perseus Mining. In fact, we spoke to the CEO just a couple weeks ago, and there was some higher than expected prices at the mine for the past quarter. But those are issues that will likely be resolved. Very strong company in terms of cash position, and checks the boxes for you in terms of mine growth, mine life. What can you tell us about Perseus?
Yeah, I think it's a name I would definitely watch at. First of all, the valuation. It's trading more or less at cash. I think the market cap is around 100 million. They have 100 million Aussie dollars in cash, no debt. The Q4 quarter of 2015 was a challenge, because they were basically mining stockpiles. So the grade compared to the resource grade was really disappointing for the market, but that was probably also expected, because the company has clearly indicated that it's going to be a softer quarter. But I think Jeff Quatermain, over the last few months or over the last few quarters since he's on board, has really gained a reputation for not over-promising and under-delivering. So I think that is the sort of deposit which still has, in a rising gold price environment, it's a low-grade deposit. It's probably, 1 gram per ton. In a rising gold price environment, I would say that deposit has a huge leverage on gold, because the costs are basically fixed. It's still the same tonnage you're going to mine. The mining contractors, I think they have renegotiated on much more favorable prices, so they have no debt. So any penny or every dollar the gold price rises should be a good addition for their cash flow. And given where Perseus is trading right now, I think it's below 30 cents, trading at cash. And don't forget, Edikan is still an 8-year mine life deposit with a few million ounces of gold. You really, at the current market price, you get this thing for free, more or less. You're basically paying the cash the company has in the bank, and the whole deposit is not priced into the current share price. So I think if you're a patient and long-term and value-oriented investors, I would look into such metrics, and then I think then you can really find tremendous value in the space.
Well, thank you for that. And another company that you mentioned before we started recording the interview is Timmins Gold. I'd like to ask you what interests you about Timmins Gold. That's a bit of a turnaround story at this point. They have had some issues over the last couple of years, but I think that you see them finally coming over those problems and starting to head back up.
Yeah. Timmins is. I think it's a real turnaround story here. I think the market has really been. I think they went into the penalty box based on the two acquisitions they did in 2015. They bought basically two mines, Caballo Blanco and Ana Paula from Newstrike. So two M&A deals. The result was they drained on the treasury. The cash was burned. I think they were down to 10 million cash. They had to serve a Sprott and Morgan Stanley loan in the order of 10 million, which has now been extended for a few months. But in the end, what you have now is a company. You basically have Timmins Gold with one producing mine in Mexico, which is San Francisco, which continue to struggle at current gold prices, which is probably a result of the grade. But then on top of that, you get a very nice project, which is Ana Paula, which came into the company with the Newstrike acquisition, and Caballo Blanco. So now I think the market is puzzled because here you have a company which potentially has a 300,000 ounce production profile on paper, which looks good, which was the story which was sold to the investors. But the market is struggling. How can you execute on the plan? San Francisco is not making a big deal of money right now because the gold price is simply too low. And Apolla needs to move the project from a PEA into a feasibility study or bankable feasibility, which in my opinion would be at least 10 or 15 million capital layoff. And then you still have to build the whole thing. But when you look at it from a value standpoint, just look at the NPV of Ana Paula and all the metrics or all the things Timmins actually did to lower the initial capital of that mine by buying, for example, a fully functional facility, a milling facility from Corp. I think the NPV is probably going to remain as high as it is. But the capital requirement will be significantly lower if they can come up with more mine optimization in going forward. And what they really did in the past is, let me look into Newstrike. I mean, Newstrike, when Ana Paula was on their books, it was an exploration asset. It was moved into some sort of a PEA, and in the good times, the market was paying, I don't know, probably 300 million for Ana Paula without really a road to production. But this is how the market values those things when the mood is good. And now Timmins consolidated is probably worth less than 100 million, right? So this is, I think, the metrics that you have to see. And I still think the market simply pays no attention. The market prices they can never afford to execute on the plan. But you see the reaction today where gold is up, let's say 3%, Timmins is up 20%. So immediately there is a reaction because this is the leverage which you as a gold investor want to see in those names. Because a rising gold price can change the whole business case fundamentally. All of a sudden, the one mine starts to make cash flow. That cash can be used to move the other project into sort of a feasibility study. And then the market starts probably to realize, okay, what is the value of that company and what can it actually be in a good gold price environment? And I think this is where the action can change to the good.
Well, that's some great analysis and good point on the leverage afforded by these gold stocks. That's why we're interested in the sector and why all of our listeners have a keen interest in the gold mining sector. I just want to mention that our friends over at Streetwise Reports did an interview with you, Florian, back in the middle of January. And since we don't have more time to discuss other companies, the title of that was 5 Companies Swiss Asset Manager Florian Siegfried is watching. Some more great information there for our listeners. Hungry to hear some more information from Florian. Florian, I want to thank you very much for coming on the show. It's a great day to get you on with some excitement coming back into the sector, and hopefully 2016 continues to play out in our favor. It's been 4 difficult years, but the time maybe has finally come.
Yeah, I really hope, and I think we have reason to be positive here, Colin.
Yep, absolutely. Well, Florian, thank you so much for coming on the show, and looking forward to getting you back on later in the year.
Anytime. It was a real pleasure, Colin. I hope to be on your show anytime soon in the future.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?